Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So, what on earth just happened? Bitcoin whales just sold more than 100,000 BTC in 1 hour, absolutely nuking the price to the downside. We're almost down at the price target we've been talking about on the channel for the past week or so. So, let's discuss, let's update the market, let's let you know what the one major price target you need to keep your eyes on right now is, and also let's discuss why are we breaking down right now. So let's start off on our first chart on the daily time frame. Now, we've been updating this for the past week or so. We warned you that when we had this parabolic run up that we were forming this bullish pennant. Once we broke to the downside, back tested resistance, back tested the 618 and started to head down. We also talked about this being a possibility of a nasty bar pattern with a price target all the way down here at 21,400, and as you can see, we are racing down to this level right now. We've completed most of the move already. We're only about another 4.4% away from completing this bar pattern, but this isn't the most important price target that I want to talk about in this video. There's really one major price target in the higher time frames that we need to keep our eyes on. But before we dive into that, let's also update the lower time frames and talk about what happened. So 21,400, this is a key level you need to keep your eyes on. We also talked about this 4-hour bear flag. Now, I've readjusted the lower bound of the bear flag at this moment in time. We previously had it drawn something like this, and I've redrawn it to this, so we're encompassing this touch point, this touch point, this touch point, and then fourth time's the charm, we finally nuked to the floorboards. Now, as we've redrawn this slightly, the price target has changed from 21,000 to 20,900. So really not much of a change over here, but as you can see, this price target down here at 20,900 would actually slightly exceed this bar pattern price target. You can also really see when Bitcoin whales, and I'll talk about why it's whales in just 1 second, stepped into the market and pulled us to the downside of this bear flag, confirming this bearish pattern. However, we can take it a step further. If we come over to the 1 hour time frame, you can see the exact capitulation right here. And as you can see, since this 4-hour bear flag, we've actually started a new bear flag with another price target down at 20,700, which is slightly lower than the previous price target at 20,900, which is slightly lower than the previous price target before that at 21,400. So it looks like we're getting a lot of bearish signals right now. We're getting a lot of bearish chart patterns that are all kind of telling us that further continuation and lower price targets are going to keep on bleeding into the market. Now, I want you to take the 1 hour time frame with a slight grain of salt. Although this 20,700 price target is extremely valid, and I do believe we will be coming down here at some point very soon. If I talk about the stock market for just 1 second, I have been noticing recently coming into Fridays that traders in the stock market tend to sell volatility at the end of the week. The stock market seems to get a tiny pushback up on these Friday events. As you can see right now, the equity markets are pushing up slightly, but these are normally sold back down coming into Monday. So, you know, what do I expect for Bitcoin over the weekend? I don't expect a lot of anything. I wouldn't personally be trading Bitcoin over the weekend. I've currently got a short on Cardano. If you've been watching the channel, if you've been watching the altcoin updates, you would know about that one. But in terms of, is there a trade in the immediate short term right now for Bitcoin? I personally don't think so. I think the lower we go down, that's another opportunity to re-DCA into the markets. I've got my buy orders still set at 15, 14, 13, 12, 11, 10 after buying at 25, 24, 23, all the way down to 16, patiently waiting for these lower price targets. But in terms of the 1 hour, like I said, it is very likely that we get continuation. All of these charts are telling us that we need to move lower, but I don't particularly expect too much of importance to happen over the weekend right now. So before we discuss the major charts that I want you to keep your eyes on, and the one price target, which if we break, the last time this happened, it proceeded with almost a 30% drop. Let's talk about why we are breaking down. Now, when this breakdown was happening, I was looking at news events, I was looking at what's going on in the stock market, cryptocurrency markets, and yes, there are some news events that happened on the day which we can kind of tie into the breakdown, but in terms of, you know, news at the exact moment of this absolute meltdown for Bitcoin, there wasn't really anything. So there's a few things that I do want to talk about. Now, in terms of what happened on the day, we had Coinbase suspending Silvergate payments, we had the SEC coming out saying cryptocurrency exchanges are not safe. safe. We had crypto.com suspending Silvergate payments. We had FTX confirming that almost 9 billion is missing in terms of their funds. And of course, we've finally got these Mt. Gox refunds coming right around the corner. Now, a lot of people are talking about the refunds right now. I do believe these will take a slight amount of time to process. I don't think they'll happen overnight. However, the deadline for these are coming in on January the 10th. So could the market makers be looking to grab a little bit of liquidity? Could Mt. Gox be, unloading onto these exchanges, liquidating, getting ready for these payments to be made back to customers? It's possible. We've also been talking about on the channel how Bitcoin whales were selling into this event. Now, Bitcoin whales beautifully sold coming into February the 27th. You can see as soon as February the 27th happened, the next data reading that we had on February the 28th, they completely just absolutely sold into this market event. This was something that we warned you about twice on the channel. We had one day where Bitcoin whale wallets broke down into new lows, and the next day we had Bitcoin whales absolutely monumentally dumping their cryptocurrencies on exchanges. And of course, we saw this massive landslide in whale wallets, beautifully timing exiting the markets a day before they nuked to the downside. So of course, once again, following what the smart money does in these markets is definitely going to help you. We follow the smart money. These are the guys that sold almost at the top. A lot of people are following the retail money, which are accumulating since 46,500, which is when the whales started selling to them. So there's two sides of the market. Make sure, obviously, you can do what you want. I think it's smart to follow what the smart money does. If you want to follow what the retail does, then of course, that is completely up to yourself. So like I said, in terms of news events, yes, there were some things that happened on the day. However, I personally don't think it was news which broke us to the downside. I think it has something to do with the Bitcoin whales, and I also believe it's got something to do with liquidity. Now, just before we talk about these price targets, I want to show you this chart over here on the Chicago Mercantile Exchange Group. We're looking at the book depth for the E-mini futures in the S&P 500. In layman's terms, we're looking at liquidity in the stock market. Now, we've previously talked about this chart many times over on the channel. We've readjusted a new data point to top out on the daily time frame at February the 2nd, which is when liquidity conditions topped out over here. So this is a long running chart we've been looking at on the channel. We talked about liquidity conditions topping out on all of these data points. These vertical bars on the top of your screen, they're not correlated necessarily to the exact top on the daily time frame in terms of price action. They're correlated to the exact tops in terms of liquidity conditions, which often mark tops in the market. Now, we recently discussed how liquidity was drying up and super overextended for your equity markets, and that's why we saw your equity market start to roll back down to the downside. Now, on some exchanges for the S&P 500, you can see we are literally sitting right on this trend line. However, for the majority of them, we are currently retesting and trading right beneath this key important level. We've talked about this quite a lot on the channel, so I don't want to spend really much time on this, but for the S&P 500, we're really retesting a lot of very important trend lines right now, and liquidity conditions are absolutely overextended and dried up. And this also shows in Bitcoin. If we're looking at the money flow index, not only looking at the S&P 500, liquidity conditions are drying up for your cryptocurrency markets. You had a absolutely monumental overextension in terms of liquidity. We are currently sitting at 75, depending on what exchange you're looking at. Some of them may be slightly lower, some of them may be slightly higher. This is kind of like an average. But you can see right now we're sitting right around 75 for the money flow index. Now, the last time we were at this level, you can see we were right here. This was almost the top. Liquidity was overextended at basically 61,000. And prior to this, you can see liquidity was extended around about here at 38,000. Of course, in a bull market, liquidity conditions can continue to get further extended when there's cheap credit, cheap money flowing around in the markets. It's very easy to get hold of money and credit. However, in bear markets, not so much. Liquidity conditions are almost as overextended as they were when we were in a bull market and we were experiencing a credit boom with tons of cheap credit in the markets. That's why your equities went up. That's why your Bitcoin and cryptocurrency markets went up. That's why you had NFTs of rocks selling for millions of dollars. So a lot of degenerative money was in the ecosystem back here and allowed these huge overextensions to happen. But right now, we're experiencing a credit crunch. There's not much liquidity. Liquidity is drying up and burning to the downside. However, Bitcoin's liquidity is super overextended. If you are a bull, you've already set your buy orders. If you're a bull, you've already set your long orders. And what happened? There was no more dry powder to add to this. So what did market makers do? They saw this weakness and they pulled us all the way back down. And in terms of the total cryptocurrency market cap, you can see in literally 1 hour from when this went down, we lost 56 billion in valuation. So liquidations are happening all across the board. Money is bleeding out of these markets. Market makers are stop hunting right now for these longs. Bulls are starting to get terrified and liquidity conditions are completely overextended. So when you see liquidity this overextended, what normally happens is when bears finally start to come in with large amounts of liquidity, there's no more money to flow into these markets. So when this happens, you see very quick moves back down to the downside. So we already had this huge capitulation. We have stock market liquidity conditions overextended and drying up. We've got Bitcoin liquidity conditions overextended and drying up. You've got Bitcoin whales selling into this event before it happened. And you've also got, you know, your higher time frame oscillators like Bitcoin, things like the stochastic RSI. These are literally just crossing bearish. Like literally in the past couple of hours, past 24 hours, these are finally starting to cross bearish, and we are extremely overextended right now. We have not had a cross from 100 on the stochastic RSI on the weekly time frame since Bitcoin was up at 69,000. Now, this is not the major move that I wanted to talk to you about. This is the chart where I wanted to let you know, of course, earlier on in the video, we talked about some very valid price targets. We talked about 21,400. We talked about 20,900. We talked about this Bitcoin bear flag price target, if I can find it, round about 20,700. However, these are all pit stops in the lower time frames. There is one super crucial chart that I want to show you right now, keeping things very simple in the daily time frame, not looking at EMA ribbons, not looking at oscillators, not looking at anything. This one crucial trend line. If you're a veteran of the channel, you know I'm not the biggest fan of trend lines. However, this one is very important. We've got a fractal that correlates to this, and also this is not looking like a nice chart pattern, so let's talk about it. Now, if we extrapolate back, you can see, you could almost argue there's a touch point almost here, but you know, let's just keep it how it is. You had a touch point here on the 18th of January. You proceeded to put in another touch point on the 13th of February. We are currently bouncing from this level on the 3rd of March. And in the higher time frames, you know, once again, don't want to focus too much on these, but a lot of things are telling us that we should be absolutely melting to the downside right now. So what happens if we lose this level? What is this level? Well, this level is literally basically 22,000 on the dot. Now, on some exchanges, it might be $10, $20 less. On some exchanges, it might be $10, $20 more. Does that really matter? Not really. 22,000 is the level that you want to keep your eyes on. If we start putting in 4-hourly candle body closes, daily candle body closes, even worse, weekly candle body closes beneath this level, it is going to be curtains for the market. And please bear in mind, like I said at the start of the video, I have been noticing recently and throughout history, it is quite normal for the equity market traders to sell volatility coming into the weekends, and they normally buy back that volatility coming back into Monday. So this is why we're seeing a little bit of a buyback in terms of the S&P 500 right now. But as we've already discussed, we quite recently had an 18-day divergence from your equity markets. Now, I'll just spend 1 minute on this chart. Basically, as we talked about, you can see Bitcoin had a high here, and it proceeded to push up and make a higher high. The equity markets put in a high, proceeded to put in a lower high, and then they started to nuke. Bitcoin has not played catch up. I've told you on my YouTube channel, I've told you on Twitter that the S&P 500 is melting and Bitcoin needs to start playing catch up with these markets. If we proceed to break down to where the S&P 500 is, you can see the S&P 500 pretty much broke down to this low, kind of halfway between this data point around here. So, you know, on average, Bitcoin should be breaking down to about 21,000 when it is going to play catch up with the equity market. So, bear in mind on the BLX, this price target is at 23,500. Of course, BLX doesn't open as much as other cryptocurrency exchanges for Bitcoin. So when we are looking at this, expect a big move back down in terms of continuation for Bitcoin. Does that happen? Does that have to happen on Friday? Does that have to happen on Saturday or Sunday? No, it's very likely, in my opinion, to start taking place coming into next week. So The price target you need to keep your eyes on is 22,000. And what happened the last time we had a pattern like this and we proceeded to break it? Well, let's talk about it. You can see we had one touch point, we bounced up, and we proceeded to make something like an M pattern with a higher high. So this was like, your McDonald's pattern, but with a slightly higher high on here. Now, if we come over to here, you can see what happened over here. We had the same pattern. You had that touch point, you had a big old M, you came back down, had a touch point, you came back up, touched this level right here, and absolutely nuked through the floorboard. So this is also in high confluence with the BART pattern that we just talked about. For the past week or so, and also today, we told you, when you have these moves like this, having a huge move up to the upside, you proceed to make a spiky top, you almost always move down as quickly as you came back up. So we've already had one candle like this. Could we have a little bit of a spike over the weekend and then push back down coming into next week? It's very, very likely, in my opinion. 21,400, 20,900, 20,700. These are all price targets I've got my eyes on. And of course, if we come down to these, we're going to lose this support here. And the last time we had a pattern like this, you can see from the breakdown, we dropped 23%. From the top, we dropped almost 30%. So from where we are right now, if we proceeded to do something like that again, we could literally drop all the way back down to 17,600. And if you've been watching the channel, you also know I've been talking about this BART pattern, another BART pattern in the higher time frames, which could likely take us down to 16,300. If we come down to 16,300, it's very likely we get continuation into new lows, ladies and gentlemen. And this is not only the only time that we've seen a pattern like this. You can see we've had many upwards slanting M patterns which proceed with huge meltdowns in the market. In fact, when we quite recently made new lows, you can see that we had a pattern like this again. We had a big old M coming down. This one didn't have a higher high though, although you see this very similar pattern play out in the markets time after time after time again. And you can see the most two recent ones that we had was right here. From the top down to the low, we dropped 26%. From this top down to the low, we dropped 28%. I do think we're seeing a situation very similar like this, ladies and gentlemen. Once again, to recap, a lot of people might be looking at the news right now, and this is very important. However, I do not believe this is being news-led. Even though the news is very bearish, even though we've got Mt. Gox refunds coming around the corner, the fact of the matter is smart money, whales, the people with lots of liquidity are shorting into a market which has dried up dead liquidity. If you're trapped in a long right now, if you're trapped with buy orders at these lower levels, then the market makers, in my opinion, are going to come hunting for these levels. We've already got dried up liquidity in every single sense of that matter. And with that being said, whales shorting and selling into this market of low liquidity is only going to provide more and more moves like the one we saw in the past 12 hours or so. So for today, my friends, that is all I've got. I do apologize for the slight delay on this one. As you can see, we broke down here for 12 hours later. I did come back and give you an update. However, as I posted over on Twitter, I was doing kendo training when this happened. I have been away from home. I wasn't even meant to be back home until Saturday, but I came back to record this quick update for you, and I may get a few more altcoin updates out before I do, wrap up today's work and then head over to my training session. So for today, my friends, that's all I've got. If you want updates like this in real time when I'm away from YouTube, when I see these breakdowns happen, of course, I'm not always glued to my computer. I'm not always in my room. I do have a life. I do train. Most of the time, I'm actually not in my house. But with that being said, when I do see these things happen, I will post them over on Twitter. So be sure to follow me at 618_cowboy for my in-time thoughts when things like this do happen. And of course, make sure to turn notifications on for YouTube. If you enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and also come join the Discord community. Make sure to head down to my official links on YouTube, click on my Twitter, Discord, Instagram, and my merch store. Hope to see you over there. But for today, my friends, that is all I've got. It's been your boy Cowboy Trades. I'm out. Peace.